hope you all are doing great. Please comment a bit about the voice and everything, so that I just want to know whether everything is fine. If you can see the video, please comment in the chat. So I'm looking at the chat now and waiting for you guys response. If you're listening to me, please put a comment in the chat so I can just start my lecture. How to get trading oxygen? Wow, that's a very important and a little bit of funny question, but I'll answer that. It's a very important question. Thank you, Octa and Sir Saeed. Khalid Arif Ji, can you guys hear me? Khalid Arif Ji and Rashid Zamir Ji, can you guys hear me? Okay, all right. So I just got okay, so everybody can hear me. That's great, that's wonderful. So now we are gonna go live in our discussion. So guys, let's start our discussion, but first I want to welcome you guys to this webinar. But first, let me just give you a rough idea about what this code is about. It's a promo code. I just wanted to remind you guys that this is available. This is available for you guys. If you wanna do your purchasing, if you put your deposit in the OctaFX, you will get 100% of your account balance. So this is fantastic. It's a great opportunity. So let's move to our session now. First of all, I welcome you all to this webinar, and this webinar is gonna be about Wyckoff analysis, which we will discuss shortly. Okay, yes sir, it's all good. All right, so let's go to our webinar. I hope you guys can see this. And you guys can look at my screen, and this is where we will be discussing our topic. So today our topic is about what? It's actually about Wyckoff analysis, and in Wyckoff analysis there are many things which we are gonna discuss today. Okay, so it is very much clear. Namaskar, Prabir Roy ji is saying namaskar Roy ji, and we have Kuhu production. Okay, Khalid, yes sir, it's all good. Sir, in deposit section there is no option to put promo code. Prabir Roy ji, please approach the OctaFX support team. I'm sure they will guide you how to get your promo code. I mean, this is the promo code, but how to put your promo code in, they will guide you about that. So nothing to worry about that. Yes sir, everything is going well. Sayyid Ehsan ji, thank you so much for coming, and thank you so much for commenting. So today what we are going to discuss is something about Wyckoff analysis. And can you guys see this picture? This is the picture of the man called Richard Wyckoff. So this picture is of Richard Wyckoff, and this picture hangs in my trading room. So this is where I always hang it. It's in my room, and it reminds me of the great trader in history who has taught us so much about the markets. And it's because of him that we can make consistently good trades, and we can make a lot of money in the markets. So the contribution of this man is just amazing, and we are gonna discuss. Jaji, I'm great. I hope you are also doing great. So let's jump in right here. Our topic is Wyckoff analysis, and this Wyckoff analysis is a lot about the market structure. Now, why should we be concerned about the market structure? What's so special about market structures? Well, the market structure is special because it can give us so many hints about the things moving. It can tell us so much about the future of the market. So in the last lecture, as you guys remember, we discussed something called accumulation, distribution, and the larger market structures. But today we are going to focus on the trade setups according to Wyckoff methodology. And according to Wyckoff methodology, there can be many great trading opportunities in the market if you understand two things. Number one, you have to be able to understand the larger structure of the market. Take a look at the larger market structures, because today we are gonna discuss the micro structures of the market according to Wyckoff method. And I will also give you specific trading setups. I will tell you where to put your trades and where to exit and all that stuff which is important for your trading. So let's go ahead now and see what's happening in our lecture. And remember, there is also a news in our in today's Forex factory schedule, and the news is gonna be roughly 23 minutes from now, and I think we will trade that. Okay, so first of all, let me illustrate what is a spring and how to spot a spring. That's a very beautiful idea. So what's a spring? Actually, here you can see there is a spring in the market, and today I just want to share with you guys that I traded this news over here. There was one news over here and there was another news at this level. So I was able to trade these both news. Actually, I bought over here and I put my TP somewhere around these levels and it was hit. Now why did I buy over here? That's what spring is all about. And then I sold over here. Roughly at this point I sold. I put a sell trade and I covered it somewhere around here. My TP was somewhere around this level, so the TP got hit again. So these were the two news today in the market which I traded, and we also have another news roughly at this level in the market today. And let's see if we have time and opportunity to trade that news. But for now I just wanna focus on our topic. And this, what do you see is this? This, some of you know about this. It's a spring, isn't it? It's a spring. Now, how do you spot a spring? A spring is a place in which the market dips under a support. This is an established level of support. Praveen Sumanji, welcome to the webinar. So this is a support level. All right, market is going up from the support, and then it's coming back down, testing support one more time, and then going up again, and then the market comes down to test this support, but it falls down below support level and then reverses and closes firm over here, and then it goes up. So this place, this point in the market is called spring. Now, why does the market have spring? Because the market wants to hunt the stop losses. Now you see, the people who are buying over here, they will come back again to buy over here when the market reaches this level again, right? When the market approaches this support, the people, the traders who bought at previous levels of support, they will come back to buy over here as well. So they will buy here and they'll put their stop loss around this level, and then they will put probably their TP around this level. So when the market goes down, dips below the support level, actually the stop loss of this person will be triggered, right? So the market dips down below support level just to do what? Just to trigger the stop loss of these people, the people who have put their stop loss around this level. And this point is called spring. If you are able to spot these springs, you can make a lot of money. Actually, you can do pretty well in the financial markets if you are only able to trade nothing but springs. Why am I saying that? Because if you are able to trade these springs, the risk reward ratio of these springs is extremely high. Number one, their risk reward ratio is extremely high because the spring takes out previous highs, so it goes very high. And number two, it's also a high probability setup. Prabhar Roy is asking, sir, your analysis is on 3-minute time frame. Yeah, it is on 3-minute time frame, but you can do it in any time frame you like. It's almost the same. The market structures are the same in all of the time frames, so it does not matter. Yeah, the news are risky. Of course, I know the news are risky, but we have to be careful with our trades, right? That's why we have to be careful. Good evening, Sunil ji. Okay, hello and good evening. Vinod Kumar ji is saying. Feroz ji is saying, please answer my question. Okay, Feroz ji, I will answer your question at the end. You can please ask your question at the end of the webinar. Okay, thank you. Okay, let's go ahead now. So what will happen over here? The spring, actually today I bought at this level, the spring. And look at this, if you buy at spring, it can be amazing. Because why? Because look at this, you buy over here and you put your stop loss below this and you put your TP around this level and your TP got hit. And this is the same thing which happened with me today because I was anticipating that there is gonna be a news over here. So what I did was I put my trade over here and the TP got hit at the news bar. It was amazing, it was wonderful. And then the market went up, but the steam of the market was going out. So I was able to short not over here, but over here. So I put my short trade over here and I put my SL just above this level and my TP was somewhere around here and the TP got hit again because there was this news bar. So these two were the news bar and we also have a third news bar coming up over here. So let's see what happens in the news times. Gold timing and ending. Gold time, you can I would suggest that you guys trade the gold at in the New York session, because the New York session is the most volatile session of the market with regards to gold. So let's go ahead now. Now I already told you how to spot a spring. How to enter the spring? It's very simple, because what you will do is when you see a support level, first of all, when you see that the market is rising up over here at this level, you should put a support below this level. So once you put this support level, you will find that the market is coming back to test this support, and when the market is coming back, it is testing this support in the form of this spring. So you put your support and then wait for the spring to happen. When the spring happens, you just buy over here and you will have a good, nice trade. And then what do? Sometimes you also have a test of spring in the form of no supply and bag holding bars. Now, in the previous session, we already discussed about these bars, but let me give you a quick recap of these bars because now they are gonna be useful. So first of all, NS bar. NS stands for no supply bar, no supply bar. How can we identify springs at A's? It may also further fall further down to identify U-turn. Okay, Khalid Khatib ji is asking an amazing question. I will answer that. Please give me 1 minute. So first of all, no supply bar. What are the characteristics of no supply bar? First of all, it will be a bearish bar. Volume very low. The volume will be very low. It will come at support, so it appears or comes at or on support. It appears on support level, and it comes after a strong bull move, or a strong up move. The volume is small, it's a bearish bar, and the size of the bar is very small. So the size of the bar will be very small. Now, how do we identify these bars, no supply bars in the market? Well, if you pay attention, this bar right here is a no supply bar. because it is coming after this huge up move, this bull move, this nice bull move. You have this nice bull move at the back, and this bar itself is bearish bar, right? It's a red bar, it's a bearish bar. The volume is very low. Yeah, the volume is very low for this bar, and it comes on support. So there is this support level. It is appearing on support level, right? And it comes after a bull move. There is a bull move, and the size of the bar is also very small. So this is a no supply bar. You can also buy after the spring if you want to buy at no supply test bar. That's also fine. Okay, the orange line in volumes is actually moving average of the volumes. Vinodji, look at this. Now if I double click this, then it will show me volume MA. So if I uncheck this, you don't have any line. If I check this, then this orange line appears, which is moving average of the volumes. Okay, so now this is a spring, and there are two possible opportunities for you. If you want to buy at a spring, that's fine, but you can also buy on the no supply test bar. Now about the question which Khalid Ji is asking. So Khalid Ji's question is, how do you know that the market will not fall further after this? Well, Khalid Ji, we know this because the behavior of the market is telling us so. Now if you look at this, the supply is heavy in the market at this level, right? So let me put a highlighter. So there is this supply which is heavy in the market, but then you have an up move, a bull move, and then the market goes down with a very small strength. So there is practically no strength in the market, almost no supply in the market. So the supply is drying out. That's why you can be confident that the market will not fall further than this level. Why? Because the supply has dried up. How do we know that the supply has dried up? Well, you look at this move, there is a strong supply, right? There is a lot of supply in the market. You look at this move, there is a lot of supply in the market, and then you have this bull move, and after the bull move, the market is coming slowly down. So it's not falling down, it's coming slowly to the supply, to the support level. One more time, when the market comes down like this, you can be pretty confident that the market is going to take a spring. It will not go further down. So there is nothing to worry about. I hope the things are clear. So let's go ahead now. I told you, you guys can buy either on bag holding or on no supply test bar. These both are the test bars. Now, how about bag holding? We already discussed the no supply test bar. How about bag holding? A bag holding bar, a bag holding bar, which stands for which is BH actually. BH is also a bearish bar, but its volume is high, so it has high volume. It also appears on support level, and it also comes after a bull move, and the size is medium. So the size is medium, and it closes in the middle, so it is mid closing bar. It's a mid closing bar. So this is how a bag holding bar appears. Vinod ji, thanks sir. Khalid ji, thanks sir. Thank you so much to you guys. You guys can ask me any questions. You can keep asking, and I will try to answer all of your questions. So look at this now. Look at this. If you take a look at this one, this bar right here is bag holding because it is closing in the middle. It is closing in the middle, and the volume is pretty high. Now look at this bar. Okay, so this is not bag holding because the volume is very small. Okay, look at this bar. The size is medium, and the close is in the middle. The bar is closing in the middle with medium size, but volume is ultra high, and it is coming after this bull move. Look at this bull move. So the bar is coming after this bull move, the huge move, and it's a bearish bar because it's a red bar, and you can see that it comes on something like a support level. Now where is the support? Remember, there is a resistance on these bars. Okay, you can put it like this as well. So there is this resistance which is turned into support. You can also buy over here. It's a bullish bar. It's actually a bearish bar, but you will buy over here because it's a bag holding bar. And bag holding and no supply, these both are the tests of spring. So you can buy on either of these two bars. Now let's go ahead. Upthrust. What's an upthrust? Actually, upthrust is the exact opposite of spring. And for upthrust, you will have different testing bars. The tests will not be same. So first, a concept of upthrust. What's an upthrust? An upthrust is a bar or an upthrust move which happens like this. So there is this resistance, the market falls down from here, it goes up again and tests this resistance and then falls back down again, and then the market is going up and then it goes further than the resistance, but it quickly reverses. So there is a lack of follow through. The market is failing to follow through to the upside. The market is unable to go up, and then it falls down with a strong downward move. This bar right here, this move right here is called an upthrust. This is an upthrust. Now, why is an upthrust important? Why is an upthrust important? Well, you can see clearly that upthrust is the opposite, actually the exact opposite. Upthrust is the exact opposite of spring, right? So that was a spring and this is an upthrust, UT or upthrust. So what will you do? What will you do over here? Well, you will sell over here, right? So you will sell, go short over here, put your SL above this one, and you can target a lot, because after UT the market falls down very hard. Hima Tari ji, hi sir. Hi Hima Tari. Khalid, can we assume this as a sideways? Yeah, it's a sideway. It's a sideway, but actually this is technically called distribution, and the earlier one was called accumulation. So this one right here, this one, this sideways movement is called accumulation. This is accumulation. And then you have another spring over here. The market is going up and failing to follow through to the upside, but then it's, look at this. So this move right here, this one right here is called upthrust. Rana ji, hi. So this is an upthrust because the market is failing to go up. It's unable to continue to the upside, and then it falls down. Hello King Ji. So this right here is an amazing selling opportunity, but you can also wait for a test of upthrust. And what's a test of upthrust? A test of upthrust can be in two forms, as you can see over here. Test of upthrust. A test of upthrust can be in two forms. One is the no demand bar, and the other one is ERM bar. ERM is end of rising market bar. So let's discuss these two guys over here. So they will appear, of course, they will appear after the upthrust, or they will appear after a huge downward move. Remember this, because these two are the tests to the downside. So you will have the test of UT in the form of no demand bar, no demand bar, and then you will also have ERM bar. ERM is end of rising market. So end of rising market, end of rising market bar, ERM bar. We call this ERM bar, end of rising market bar. So you can have these two bars as a test of upthrust. But how do we know that the market will go down after these bars? Because there was a strong down move at the back. So I'm gonna give you the definitions of these two bars shortly. But in the meantime, allow me to share with you an amazing opportunity from the side of OctaFX. I hope you guys can see that we have an amazing opportunity. If you deposit your money in OctaFX account, whenever you make a deposit, actually the first time, if you are depositing $100, Octa will give you how much? Octa will give you $100 more. If you are depositing $1,000, then Octa will give you $1,000 more. So this way you can double your money, you can double your deposits just by using this promo code. So you can avail this wonderful opportunity if you just go to OctaFX website and put your deposits and enjoy the discounts. Actually, it's not discount, actually it is double the amount, so it's giving you double the amount. So let's go back to our lecture now. So guys, you can see that we have this amazing two bars in the form of ERM and what? And no demand bar. And remember, we are gonna have a news over here. So do you guys think that we should trade the news? Do you guys think that I should trade the news with you guys or no? Please, can I see a show of comments from your sides? If you guys are interested, then we can trade the news live right here, right now. Okay, the time is drying up, so I will discuss a little bit about this no demand bar and then we will put a trade also. A no demand bar is a bullish bar. It's a bullish bar. It's a bullish bar, so it's a green bar. And it is also, King G, what help do you need? If you need any help, we are here to help you. Don't worry about that. We can help you with everything, deposits or any other thing. We can help you. Patel Ji, welcome. Okay, yes, sure. Okay, so we are gonna trade the news very shortly, but first let me give you a little bit about this no demand bar. Volume is very low. The volume of this bar is very low. Size is small, so it is small size, and the volumes are very low. And what else? It comes after a huge down move and below the resistance. So it comes below resistance. So these are the properties of a no demand bar. No demand bar is like this. Then we have ERM bar, end of rising market bar. It's also a bullish bar. The volume is high. It has a very high volume, and it comes, its size can be medium. Size is medium, and it comes after a huge down move, and it also appears below resistance. So these are the properties of an ERM bar, end of rising market bar. Okay guys, so it's gonna be time, and let's jump in for our trade. So what do we do over here? I think it's gonna be a sell trade, so I will just put my sell over here, and I'll put my SL above this line, and I'll put my TP around this level. So let's see what happens. Let's see what happens. Okay, so the market is going up or down, we don't know, and we are just waiting for the market to show us. So this is the news bar. Remember, this is the news bar. This is the news. The news has been announced already. I think the market has a lot of difficulty going down, so I don't know if we should close the trade over here with some profit. So how much is the profit? You can see we have a profit of okay, the TP is okay, the TP got hit, so we earned how much? We earned how much did we earn? Because there are no commissions in OctaFX, so we are earning $71.4 guys, right here, right now. So we just earned how much? $71.4 in our OctaFX account. So let's go ahead now. I hope you guys learned something from this trade. Actually, it was a news trade. The TP got hit. Okay, so let's go ahead now. Now, what's the output of a TP, of a UT? The output of a UT is normally how much? It exceeds the previous lows. It exceeds the previous lows. So if this is a UT, as I told you, this is a UT and upthrust, then the output, so the market will probably exceed these lows. So you can safely put your TP at this level. If you are selling at this level, you can safely put your TP at these levels. So this is how much you can earn from a UT upthrust. Do we trade as per the news, as in share market, or one has to avoid news and rumors? Okay, so Khalid ji, my idea is that you should trade news. You should always trade news, but try to trade the news with small amounts, small lot size. So don't avoid news, because the news can give you amazing profits. You can see that we already got our TP hit, right? So we already earned how much? $71 from this news. So you could also make this $71. Okay, so Saeed Muhammad is asking, sir, which pairs are good for your strategy? All of the pairs are good for our strategy. The only thing is that you have to search for the pair which is suitable for you, because all the pairs move in a particular way, but their overall behavior is almost the same. So don't worry about that. You can use my strategy in all of the Forex market pairs. Nothing to worry about over there. Okay, so look at this now. Look at this. So this is the output of a UT. This is the output of a UT upthrust. You guys can see that it came down all the way to this level. Sankar Nath ji is asking, what is UT? It is an upthrust, as I told you, upthrust. It goes up below, it goes up above a resistance like this. So this is a resistance, right? And it goes up and then reverses to close down, and then it falls down like crazy. That's what a UT is. So you see, we just traded the ND bar. So look at this. So this was an ND bar, no demand bar. We just traded this no demand bar. If you are paying attention, this is a no demand bar. I just did it. Yeah, of course, Saeed Mohammed ji, you can use this strategy very much for golds, for gold. No worries, you can use it. So a no demand bar. Now let's compare this to our trade setup, which we just did right over here. A no demand bar is a bullish bar. Yeah, this is bullish bar. The volume is very low. Yeah, look at this. The volume is less than previous two. The volume is less than previous two bars, right? So it's a low volume. It's a very low volume. The size is small. Yeah, look at this. The bar is not much big, so the size is small. Comes after a huge down move. There is a down move at the back. You can see this down move at the back, right? So this is a down move. Welcome Sankarji, welcome Saeedji. So this is a down move, a huge down move at the back, and it comes after a huge down move, which we already did that. It comes below the resistance. So you could actually make a small resistance over here, right? Because there is this resistance coming from these points. So you could also just put your SL just above this line and trade this. We just did it. And you guys can see that we already got how much? $71 or something like that, just like that, in the matter of 1 minute. You are the best teacher in Octa. Okay, thank you so much, Saeedji. Thank you so much. Thank you so much. It's so kind of you to say these words. Now let's discuss a little bit about ERM bar, end of rising market bar. What's an ERM bar, end of rising market bar? Well, it's a bar which has ultra high volume or very high volume. It also comes after a strength, and it's also a bullish bar. So let's look for this kind of bar in the market right now. So what kind of bar do you see over here? This is an example of ERM bar, end of rising market bar. Why? Because you can see that there is not much big, but there is a down move at the back of this bar. Praveen ji, thank you so much, Praveen ji, for your comments, kind comments. So this is ERM bar. Why? Because the volume is ultra high. The volume of this bar is ultra high, right? And it comes after a down move. So the market is already exhausted. And why do I say that market is exhausted? Because you can see that the trend channel, the market is gonna be overbought in the trend channel. Look at this now. You can see the market is overbought over here, right? So guys, now you just put together all these ideas, which we are going to do in a minute. But first, Praveen ji, thank you so much. But first, just think about this. I'm saying that this is overbought, right? The market is overbought, which means when the market becomes overbought, you can be confident that the market will go down. Number one point, right? Number two, when the market comes against the resistance, comes below the resistance line, look at this, no demand bar, no demand bar, right? So when the market comes below resistance, you can be pretty confident that the market is going to go down. So we are going to put together all these ideas. Okay, so Saurav Sarkar is asking, sir, you trade at the time of news, but already UT is there previously. Should we enter there? Yes, yes, yes. Saurav ji, you are right and very intelligent. Because if you already entered on this UT, then you will get much more profit. Now, why did I trade just in the news, just around the news? Because I was busy in the lecture, right? So I was busy talking to you guys. That's why I did not trade this upthrust. But actually, if this lecture was not going on, then I would have traded just like this. I would have traded over here and waited for the news to go in my favor. So you see, the profit would have been much bigger. Saurav ji, great question. Okay, so Bansali ji is asking, sir, how can we receive news opportunities? Bansali ji, I'm gonna show you this thing called Forex Factory. As you can see, this is the news calendar. Just go to this point, calendar, and you can see that there are news. So you just have to do somewhat filtering. So for example, first your market will, your platform will look like this. The Forex Factory platform will look like this. So what you do is you go to filters, and you don't want all these news, you just want high impact news. So just uncheck these things and apply the filters, and you have these news, right? So you can look at the news according to your time frame. And today the news which I just traded was Jolt's job openings. Just now, just how much, 9 minutes earlier, this was the news which we traded. So you can take all the news from Forex Factory. The news are already announced. I mean, they are pre-scheduled over there. So you can go and see what types of news are gonna be announced. Tonight, according to Indian time, you are gonna have a news at 12 a.m. So it's gonna be the Thursday 12 a.m. just the start of the day. According to Pakistani time, it will be 11:30. Himaji, you can see the news over here. Okay, so let's go back to our discussion. Now I was telling you that the market edges. What are the market edges? Okay, Peaceful Mind ji, please keep coming, because this really is a great channel. This is the channel of OctaFX, and you are gonna have so many webinars on this channel. So please please keep coming back, because you are gonna learn so many things. Khalid ji, how can we know when to enter and which to exit? Relates to similar to intraday. Yeah, it is, Khalid ji. It's a very important question. So I'm gonna give you my strategy, which you can use for your entries, so you don't have to worry about this. But remember to test my strategy. Don't just rely on my strategy. You have to test it for yourself. It will work, and then you can be confident. So what are the market edges? So I'm claiming that these are the market edges. Now, why do I say that these are the market edges? Because an edge is an end of the market in some way. So for example, I'm saying that when you have a trading range like this, anything which becomes overbought will react. For example, if you have inside this trading range, you have this channel, this trend channel, right? You have this trend channel and the market is moving in this trend channel. And once you see that the market is over here and it is overbought like this, you see it's overbought. So you will call this what? You will call this overbought. I'll call this overbought, right? I'll call this overbought in the trend channel, right? So the market is overbought in the trend channel. So what will happen when you have overbought in the trend channel? The market will react from that point onwards. So it will go down. And one more thing, when the market is at resistance, what will happen? It will also go down, right? So remember these 2 points, because we are going to put together all these 2 points to create a strategy, a trading strategy, which will greatly help you in the markets. So the next point, when the market is overbought, that's an edge of the market. When the market is oversold, that's also an edge of the market. How do I mean? Well, I mean to say something like this. When you see a trend channel and you see that the market is oversold in the trend channel, so the market is coming down, going up, coming down, going up, coming down, going up, and coming down like this. So this is oversold, right? This is where the market is oversold. The market is oversold. Okay, so when the market is oversold over here, you will call this OS, or oversold, right? I'll just put my text over here and call it oversold. Okay, so the market is oversold over here, and it is expected the market will react from this point. Why? Because you have 2 points happening over here. One, the market is oversold in the trend channel, and number 2, the market is on the support level. So these 2 things tell us that there is a very high chance that the market will go up from this point. Indicators, Khalid, I don't use any indicators. I don't need to use them, but I will give you a series of webinars, one full module about the indicators. So please bear with me. We will have a series of webinars in the future about indicators, RSI and all these indicators. So don't worry about that. But first, I'm saying that this is oversold, right? Now what will happen? So these 2 points I already explained. This is oversold and this is overbought. How about a strategy? Then you have jump across the creek and BUEC. So what's the jump across the creek? A jump across the creek is when the market is coming out of a trading range. Now remember guys, we will put together all these things in the context of a strategy. Look at this. This is a trading range accumulation, and then the market goes up from here. This is called jump across the creek, jack. I'll call this jack, jump across the creek. And then the market comes back down to this level. It's called back up to the edge of the creek, and then it goes up from here again. So this point is called jack, or jump across the creek. So I'll call this jump across the creek, jack for short. Okay, so this is jack, jump across the creek. And then you have this point, which is called what? This point is called back up to the edge of the creek. I'll call this BUEC for short, BUEC. So this is BUEC point, right? So this area is BUEC. Now we will take a look at this. So I'm just discussing the micro structures of the market. When the market takes a jump over here, you will look for a buying opportunity. Don't buy. I'm just saying that you should look for a buying opportunity, and you will have a buying opportunity in the form of a spring or no supply or bag holding over here. You will have buying opportunity. Which one? As I already discussed, these 3 things can be there. One, spring, it can be spring, or it can be bag holding, or it can be no supply test. So if you find these 3 things, any of these 3 things, you can buy over here, right? Because there is trading range below and the market is coming out of trading range. Difference of this with UT, I will explain. Just give me a little bit. Okay, so this is the market structure of an accumulation. You can buy over here because this is spring, and you can buy over here because this is a backup to the edge of the creek, BUEC. So this is a BUEC setup, and this is BUEC setup with spring, and this is spring setup in the accumulation zone. And then in the same way we have what? Look at this, guys. We have Jack, I already explained, and then there was BUEC back up to the edge of the creek. Patelji, if you don't have 3-minute time frame, you can use 5-minute time frame. No worries about that. Don't worry. And I would say if you are a beginner, please don't use 3-minute or 5-minute. Patelji, if you are a beginner, please use 15-minute time frame at least. If you are experienced, then you should use 5-minute time frame. Okay, don't use 3-minute time frame. But the opposite. So let's come back to our discussion. Jack is jump across the creek, BUEC is back up to the edge of the creek. So the opposite of these two will also happen in distribution zone. Imagine that this is a distribution zone. What will happen? The market will go up to this level because there is this resistance over here, right? So the market is coming up to resistance, then going down, and it is becoming overbought over here. And remember, the market is overbought as well as it is preparing for UT, upthrust. So you will have a UT over here like this. So you can sell over here, right? Because this is an amazing opportunity to sell. UT, you have an upthrust over here. DKG, namaskar. So this is a UT, right? An upthrust. What do? You can either sell over here on UT, or alternatively, you can wait for the tests to happen. So around these levels, you will have three things. You will have three possible things. One, either you will have a UT, which is upthrust, or you will have ND bar, or you will have ERM bar. We just discussed all these bars, right? And then the market falls down from this point because you sell over here. It can be any of these three bars. The market falls down over here like this, but it goes back up to test this level. Kashif ji, walaikum salam. But then it falls down like this. So you will have an amazing opportunity to sell over here. Sir, is the spring and UT the best trading setup? Yes, Saurav ji, spring and UT are the best setups. There are many big experienced traders. They only trade UT and springs. But let me give you one more tip. Don't only rely on spring or UT, because I'm gonna give you a great strategy just in the matter of few minutes. So please bear with me. So how do we recognize BH? Verma ji is asking. Verma ji, please go back a few minutes. I already explained how do you recognize BH. So please go back a few minutes. You are the best teacher. Thank you so much, Kashif ji. Thank you so much. So the market is falling down like crazy from this point. So this point is called what? This point is called fall through ice. Fall through ice. FTI. We call it FTI. And then the market goes up again to this support level, which is now turned into resistance. The market is testing this resistance level in the form of which bars? Can you guys tell me in the form of which bars? Which bars can you see over here? Well, you can see 2 or 3 possible bars. Which ones? You can see no demand bar, or you can see end of rising market bar. These 2 bars. If you see these 2 bars, if you find these 2 bars, just sell again. It's gonna be an amazing trade. just sell again over here, because you have no demand and end of rising market bar. So you can sell over here and it will go down. So now it boils down to these points we discussed already. What did we discuss? We already discussed that you have to look for springs and upthrusts. You also have to understand overbought, oversold, jump across the creek, back up to the edge of the creek. Then you have to understand fall through ice and rally back to ice. So this point right here, this point is called rally back to ice. I'll just name this rally back to ice. So rally back to ice, because you see it's the ice level, right? RBI, rally back to ice. So this is ice level. This support is called ice. When the market is falling, we call it fall through ice, FTI. And when the market goes back up for another test, this point is called a rally back to ice. Gurpreet ji is saying the way you are teaching is wonderful. Gurpreet ji, thank you so much. बहुत धन्यवाद. Thank you so much for your kind comments. So when you have this rally back to ice, you have another amazing opportunity. If you find ND or ERM, you can sell over here. Okay, I'll make this blue so that you guys can clearly see. Okay, this is ND and ERM. So you can sell over here if you have ND and ERM. Sorry about that, guys, it should be red. Okay, so now we are putting together everything in the form of a jigsaw puzzle. How testing happens? You see, the testing happens in the form of ND bar, NS bar, ERM bar and BH bar. Farooq ji, walaikum salam, walaikum salam. Thank you for coming, Farooq ji. And what's the role of volume? I already explained. The volume for NS and ND volumes are very low for ND and NS. Okay, for these two bars the volumes are pretty low, so please try to understand the role of volumes. Thank you so much, Farooq ji. Trading on 3 minute and 5 minute can't be called scalping, na sir? Well, scalping is very, very small. It can be half minute or 1 minute. So, and I will not encourage you to do scalping, because scalping can be dangerous. We want you to stay in the game for a long time. Thank you, Khalid ji, Khalid Arif ji, thank you so much. So the volumes for ND and NS are very small. And how about the volumes of BH and ERM? The volumes are exactly the opposite. The volumes are very high. This is so simple to understand, isn't it? Extremely simple. Ahmed Shah ji, thank you so much. Thank you for your comment. So you have to understand the volume, the role of volumes. If the volume is falling when the market is going up, then you can expect that when the market reaches this level, the resistance level, you will find ND bar. Saurav ji, you can open 2 trades, no problem, but try to open 2 smaller trades. For example, if your normal lot size is 1 lot, then now you will open 2 trades of half lot. So half lot. You open 2 trades, half lot. And then you can put the TPs at different points, but the SL at the same point. I will explain in the next webinar, which is on next Wednesday. I will explain this point. It's gonna be very important and very helpful for you guys. So I was saying that once you understand all these points, now you can understand my strategy. So welcome everybody to this amazing strategy, which I have traded for thousands and thousands of times, and it is working like crazy. Prabirji, thank you so much for your kind comment. Thank you, extremely great of you. So this is my amazing strategy. Actually, it's not amazing because I am saying so. It's amazing because it is working. It works. If you want to make a ton of money, just follow this strategy. And let me now explain this strategy. I will remove everything over here and I will put my strategy over here. Okay, trailing stop I will explain in the next webinar, because the next webinar is gonna be about risk management and money management. So I will explain that. Please bear with me up to the next webinar. So these are the points of my strategy. So your strategy, which is gonna be your strategy, not mine strategy only. These are the 5 points which you should remember always. First of all, check the background. Is it weak or strong? Okay, so let me write in a different way, because not weak or strong, but is it up or down? Is it going up or going down? Okay, so you just check this, the background. Is any conditions to go up at UT, at level of UT? Yes, it can go up, DKG, it can very much go up, but sometimes, but that will be because there is a huge up move at the back. Then the UT will not happen. The UT will fail. So then you should not trade. If the market, okay, let me explain this, because DKG has asked a very important question. So if you see that the market is going up like crazy, like this, and then testing, and then like this, then you will not expect that there will be a UT over here. No, it will not happen for quite a bit of time. For quite a lot of time, there will be no UT shooting up like crazy. So don't wait for UT over here, because there is this vertical up move, this huge up move, then the UT will not happen. Remember, the UT will happen only after you see some weakness in the market. If there is no weakness, then don't look for UT. And similarly, if you find that this is a support level, because this is a very important question which DKG has asked. Thank you so much for this. You see, if this is support level, right, and then the market went up like this, but now the market is falling like this, you cannot expect a spring over here. Remember, I already explained that when the market is coming down for a spring, it should be slow and steady, slowly, very slowly. Sir, how to recognize the background? It's very simple. You just look at whether the market is going up or down. If the market is going strongly up, then it's a strong background. If the market is going strongly down, it's just a downward move. Okay, so that's how the background is. So simple. The second thing you will check is whether the market is on support or resistance. If the market is on support, you should look for buying opportunity. If the market is below the resistance, you should look for a sell opportunity, right? Makes a lot of sense and very simple to understand, isn't it? And then you have trend line violation. Now what's that? Trend line violation can be in the form of OB, which is overbought, or OS, which is oversold. I already explained that, right? So if you see that the market is overbought, then you can expect that the market will go down from here. Okay, so let me illustrate. This is a trend channel. All right, so let's put this trend channel over here. Can you see something over here? Can you see that this is overbought, isn't it? This is overbought. If this is overbought, that means the market is gonna go down from here, because it's overbought in the trend channel. So it is violating the trend lines. That's why you should expect that the market is gonna go down. But now we are putting together all of the parts of the strategy. Okay, so look at this, guys. Look at this. The market is shooting downward, shooting to the downside. If you see a market like this, you should look for a selling opportunity, not a buying opportunity. All right, because this is a weak background. This shows that the background is downside to the downside. So you should look for a selling opportunity, not a buying opportunity. Simple, isn't it? So now let's come back to our strategy. Background, look at this. The background should be either up or down. If the background is down, you should look for a selling opportunity. If it is up, look for a buying opportunity. Very simple, right? And then we have the other points which are trend line violation. As I explained already, if it is overbought, then you should look for selling opportunity, because it's overbought, now it will go down. If it's oversold, then you should look for buying opportunity, because it will go up now. So OB and OS. And what's the fourth component of our strategy? Reference line. Very, very simple but very important. Reference line. And what's a reference line? Reference line is when the market reaches a certain level, when the market reaches a certain point, you should look behind. What do you expect? What was happening when the market came to this level previously? What was happening? That's what a reference line is. So for example, the reference line of this point is over here, right? So what do you see at the back? You see heavy selling. Chances are that you will see the same thing happening over here also. If you look at the reference line for this point, you have this support over here, and then you look at the reference line. Look at this. What do you see here? You see that there is huge bull move. So the market will probably go up from here. So that's how you check the reference line of the market. Now look at this, the reference line of this point. What do you see the reference line of this point? This one. There is selling in the background, right? Dear sir, you're in my chart, the bar are different. How to set? Okay, I will tell you how to set the bars like me. Okay, so I explained what's the reference line. So worldwide channel G, if your bars are looking like this, like this, probably, okay, if your bars are looking like this, then you should double click over here, and this thin bars, uncheck the thin bars, and then check this HLC bars, because your bars might be looking like this. Okay, so you will do two things. Double click this and do two things. One, uncheck the thin bars and check the HLC bars. Now they will look just like me. So that's how you do your settings. Okay everybody, so I was explaining how to check the reference line. If you check the reference line of this level at the back, you will see a huge downward move, which means there is selling going on in the market at this reference line. In the same way, if you look at the reference line for this point, I want to check the reference line of this bar. So what do? I just look back. So I'm looking back and I'm finding that the market is moving down. So the reference line says that the market will move down over here, and the same thing happened over here, right? Similarly, if you check the reference line of this guy right here, you just look back and you see huge up move. So this is telling us that the market is going to go up from here. Very simple, isn't it? So if you have this reference line, you understand this thing, you understand the background, you understand that the market is either on support or below the resistance. You also understand the trend line violation, which is overbought or oversold. You understand the reference line. Now finally you have the entry bar. So what's the entry bar? Entry bars. You have 6 types of entry bars. A, B, C. I will explain these 6 bars in these things. Okay, so A, you will buy on spring, right? Remember, you will buy on spring, you will sell on UT. You will buy on NS, remember, and you will buy on ND. No supply, buy. No demand, sell. You will buy on bag holding and you will sell on end of rising market. a very simple strategy I'm giving you. Please note down this strategy. If you follow this strategy with letter and spirit, I assure you, you are gonna make a ton of money from the markets. The strategy works, but you have to practice this strategy over and over and over again. I have practiced this strategy for thousands of times. And that's why, guys, today in this very webinar, you guys saw that I made $71 just like this in a matter of 10 seconds or 15 seconds, something like this. If I can make $71 in 15 seconds, you can also do that. Just follow a good strategy. And today I'm giving you this strategy for free. Thanks to OctaFX for this webinar. So if you follow this strategy and you practice it a lot, you will be able to make a lot of money from the markets. Thank you for your time. And now I will once again draw your attention to this thing called my promo code. I'm extremely thankful OctaFX has given us this promo code. If you use SAEED100, you can double your deposits in the OctaFX. So for example, you are depositing, let's say how much? Let's say you are depositing $100. It will show 200. I thank you everyone for coming. If you have any questions, you can ask them at the end of this webinar in the form of comments. If you like this video, please like it and share your ideas with us. Thank you so much, everybody. See you. Stay blessed.